This morning, my team had one heck of a debate about that position. We put it on just coming on the set on Tuesday onto halftime, 190.10. And the debate they're having and with my crew is the same the market's having. I've got half a team that calls this company consumer, discretionary, consumer electronics. And there is no example in history where margins don't get compressed over time, regardless of how great the brand is. Many stories like Sony, Nokia, Motorola. And people ask, well, why does it trade at a 17.1 PE? Because basically 68% of the revenue of this company is tied to one product, the iPhone. And that includes the services business, because one problem, and this is the bear case on services, is that you need to continue growing the Trojan horse. You have to own an iPhone to buy these services because they haven't really reached out yet onto other platforms. They could do that, and that could be a better outcome long term. But at some point, and I don't know when this is, and when you talk about getting to a Clorox multiple of 24.5, I don't see that likely, because you don't have to innovate bleach. You have a brand, you maintain it in the customer's head, but you have to innovate the phone every year. And that innovation sometimes doesn't work out the way you as Steve said, the Samsung 9 is a dud. And so, my concern is that we don't get PE expansion. Let's remember that the services business, and the reason I bought that was my concern of being left out or missing out on a services print north of 30. It came in at 31. The stock has reacted very well. But at the end of the day, I had to listen to the naysayers on my own team and sell half the position an hour ago. It's been a tremendous outcome. We're still shareholders. But I've got a lot of people asking me, tell me what's next. They leave out the euphoria of the $1 trillion. I think the market's going to keep this under a 20 PE until that's resolved.
Well, you'll be the face of selling on the news, then, Kevin O'Leary, selling down half the position. Toni Sacconaghi, you still with us?
I am.
You want to address what Kevin O'Leary just talked about?
Look, I think Kevin makes some very fair points. If you look at Apple's major products, iPod, iPad, and Mac over time, they have premium prices. They all sell at 2 to 2.5 times the average market price. But generally speaking, those revenues have been flat to down over the last several years. And Apple is carving out the high end for iPhones. The iPhone sells at more than 4 times the average price of global smartphones. And so the question is, this is an exception. Every Apple product and almost every other consumer electronics product, prices go down and margins generally go down. And it's unclear when that debate will go away, because there's always going to be the worry that Moore's Law inexorably drives down price and margin. And there's always going to be the worry that, as Kevin pointed out, that innovation could ultimately leapfrog the device. And so that's why I do think it's difficult to get multiple expansion. I think, our feeling good about the stock in the near term is really driven by earnings power, because if you're buying back 6 or 8% of the shares, and even if iPhone units are growing, but you're able to take price, plus you have services and wearables growing on top of that, you can get to some very nice earnings growth, and you don't need a lot of multiple expansion for the stock to continue to do well.
Right. Kevin, you want to address that? I mean, maybe no one's going to fault anybody for taking profits. It was rather quick, though. Maybe too quick?
No, the annualized return on that trade is the best return we've had this year. And so I can't face a young, aggressive analyst with good points and lots of history to back it up and say that she's wrong. I can't do that. And that's why I have to listen to these voices. And this is a millennial who uses the product, but skeptic that we can ever get multiple expansion north of 20 times, while 68% of the revenue comes from the ecosphere of one consumer product. It's unprecedented, and I'm euphoric like everybody else. I love milestones like $1 trillion. It's wonderful. But it's a phone, no different than a Nokia or a BlackBerry or a Sony device that played music decades ago. And it's really hard to stare at those case examples and ignore them. And that's why there's always going to be a big debate. I do not see Apple trading at a 25 PE.
You think those were as premium of brands with the installed base, the likes of which Apple has? You don't think that, Kevin?
I remember a time when Sony was the premium brand for all consumer electronics. They were the first to make a portable cassette player, and everybody was euphoric. There was no bigger brand than that. And they're a great company today, but they have a massive diversification of revenue. They're no longer the leaders in televisions, for example. Look, I don't want to be the naysayer. I'm already getting hate mail, believe me. But to take half off the table on an annualized return that we just made, and to tell you the truth, the reason I did that trade, to call back to the office and do it, was I'm walking on the set and I knew we were going to be talking about Apple. So, Judge, I'm going to give you a lot of credit for forcing me into that position after I'd sold it last February. I'm taking my hat off. Thank you very much. But I have to deal with the fact this stock will never trade at a 25 PE, a 23, a 24. I'm pretty convinced of that. And I think we've seen a really good run here, and earnings are terrific, but at some point, the compression on margins will occur, as it has in 100% of the time, not some of the time, all of the time in consumer electronics. I hate to be the naysayer, but those are the facts.